This is Pat Walker at Mission Winners. We're doing a video overview of stocks in the top 20 groups. We normally do this for leading, by the way, let me clarify, leading stocks in the top 20 groups. Normally we do the top 10, but given the market, we broadened it out a little bit just to get a better feel for things. So what are we looking at here? We're looking at, again, top 20 groups. First stock on the list, this is, by the way, I'm going to drag this into the window so you can see this. Here's the top 20 groups right there. All right, there they are. We're going to drag it over here. I'll keep it right there for you, okay? We'll drag it out and we'll bring it back in at the end of the video so you can see it. So here's it is. This is group number 2, computer software medical. And you can say, what about group number 1? No stocks in group number 1 made the cut. All right, we have constraints. We're not going to look at junk. All right, we're trying to find quality. So here's ViiV. ViiV. Taking a look at it, and again, this is group number 2, software medical. All right, this has an earnings per share rank of 99 and a composite rating of 98. You can see a potential top right there, okay? Has an accumulation distribution of C, nothing really special there, okay? Next stock on the list is Teladoc. Teladoc has an earnings per share rank of 36, but it's got a composite rating of 95. You'll like this, relative strength of 99. You can see it's just basing right here, all right? If she can take out these tops right here, there's potential for it. I will encourage you, though, be careful here. The market is not in a really good place, as you all know. So be cautious. Err to the side of caution. Don't be a gunslinger. There's a great quote. I read this quote from Ed Seykota decades ago. There are old traders and there are bold traders. There are very few old, bold traders. Something to consider. So there's Teladoc, all right? Next stock in the list right here is CCOI. CCOI is, well, you can see the name here, Cogent Communications. Has an earnings per share rank of 90, has a relative strength of 98, and it's strong, and it has a composite rating of 97. So it looks good. You can see these tops going across here. What's one negative? I want you all to think about this. Like, well, those are clean tops. That's easy. Picture this. There's people that bought this stock at 67 bucks a share, and they're up almost 10 points. Is there a potential that when it gets up here, they could sell? Possibly. I'm not saying they're going to, but in this market environment, err to the side of caution. The next stock on the list, and now we're coming into some biotechnology stocks. Seattle Genetics. Now, I will tell you this. This stock's got an earnings per share rank of 39, but last quarter's earnings were up 116%, and last quarter's sales were up 66%. That's positive. And again, one negative though, and this is a big, big red flag. This is a genetic stock, biotechnology. Biotech can be really good when it's really good, and it can be really bad when it's bad. I mean, it can mark you. So please be careful with individual biotechnology stock. Does have good numbers though, as I said, last quarter's earnings up 116%. Next stock on the list is Regeneron. Regeneron's got an earnings per share rank of 91 and a composite rating of 98. You can see these tops right here going across this line right here. Possibility right there. Possibility. And again, it's biotechnology, so be aware of that. Just be careful. Next stock on our list is, drum roll please, Vertex. Vertex is, again, a biotechnology stock. It's got an earnings per share rank of 97 and a composite rating of 99. Relative strength is 96, leading it into new high ground. I mean, it looks good. It's got good earnings estimates. It is biotechnology. You can see that thing can move around. I mean, the high on this bar is 247.50. I'm rounding. The low is 234.50. So you got a 13-point swing here that you need to take into consideration. See how tight, how loose this is? You like tight chart patterns. This is not, see how tight it is right here? Look at how constructive that is. Look at this. Just be careful with it. Can't stress that enough. And it is individual biotechnology. The next stock on our list is Kiniksa Pharmacy. Biotechnology. Relative strength is 98, leading the stock into new high ground. Doesn't have any earnings, doesn't have any sales. But, again, it might be something that could possibly lift. Just something to consider. But it is, I stress, biotechnology. Great group. Not denying the group. Just be careful, please. The next stock on the list is Eli Lilly. This is medical diversified, not biotechnology, medical diversified. Earnings per share rate 92, relative strength rate 95, composite rating 99. Looks good. But again, I mean, look at how loose this is versus how constructive this was all through here. This, just be careful in these kind of environments. I can't stress that enough, all right? By the way, when I say that, I'm not knocking the stock. I'm not knocking any of these companies. I'm just pointing out the pluses and the minuses of the charts to help us make better decisions. That's all. Chewy's retail internet spiked up on good volume, giving it all back. Look at this. You bought that right there going across that line. It's like, whoa, this is great. I'm up almost 5 points. And now I'm down $1. That's the kind of market we're in. And again, I stress, I am not sounding or trying to be negative. I'm just analyzing what's happening. It's analogous to going outside tonight at 10 o'clock and saying, oh, it's dark outside. Yes, that's all. It's not good. It's not bad. It's nighttime. The markets are choppy. That's all. We just get in line with it. And we don't force our opinions on the stocks. Next stock on the list is RingCentral. RingCentral is in the Computer Software Enterprise Group. Earnings per share rank 87, composite rating 99. Runs up on decent volume, pulls back to the 50-day. The green line is the 50-day. This is the 8 EMA, and this is the 21 EMA. You can see this lifting up a little bit. Could it possibly lift across these tops? Sure it could. I'll show you a little tactic. Look at the hourly. This is tactics we teach the VIPs. Look at this. You got a cup and a handle on the 30-minute. Had some good volume coming into it. Possibly taking out those highs. Go back to the daily for you. Just doing some analysis. Now, let's back up a step. Is this tight and orderly here? No. This is a good volume bar here. This is not tight and orderly. It's a little loose. Please be a little cautious. I can't stress enough. Please don't think that the market's open for business. You got to do business. No, you don't. Next one's 5.9, Computer Software Enterprise. All right? You can see where this ran up. It's a pretty ugly tail bar here. That was met with selling pressure right there, okay? It's got an earnings per share rank of 54. It does have a composite rating of 98, but it's flopping around here a little bit. Found support right here on the 50-day, all right? Perhaps it will lift. I'll take that off because that's an old note. Here we go. So let's move on. Here is the next stock. Akamai. Akamai is in the Computer Software Enterprise Group also. It's picking up. Earnings per share rank 87 and a composite rating of 98. Ain't that festive? Decent base forming right here. You can say, boy, that is an ugly bar. The one saving grace about this bar is the volume was not extremely heavy. It was above average, but not extremely heavy. But look at the chart. Let's pull back a second and always think about this. Look at the chart. Is this a tight chart pattern? No, it's loose. Loose indicates high investor emotions. You have to be careful with that, always. Is there a clean entry? This is something else we teach all the time at Mission Winners. A clean and simple entry will give you a clean and simple exit, all right? If you're wrong, this is loose, so be careful. Just be careful. Now, the next one on the list is Infi. This is in a good group. Earnings per share ranks 76, got a composite rating of 98. This has gotten relatively tight right here. Started to pick up on Friday on a slight pickup in volume. Can it lift across these lines? That has a potential. This was written up recently in IBD, as I said. Earnings last quarter were only up 4%, so this is old. Previous quarter, earnings were up 50%, so it's lost a little bit of power. But look at the volume here on this pop. That's good. That's good. We bought this back here, all right, when it did have really good earnings, and it was a decent lift for a short period of time. Let's continue onward. We're almost done. Mellanox. MLNX. This is semiconductor. Good group. Earnings per share rate 96. Composite rating 99. Relative strength 92. Lifted off here. Earnings per share rank, as I said, 96. Lifted off here. Look at that volume bar. Is that power? That's power. Ran up and it's gone sideways. Perhaps it'll lift across that line, these tops, in a good market. Can't stress that enough. C minus accumulation distribution. Next stock on the list is right here, American Barrick Gold. Well, it's American Barrick. I'm dating myself. Barrick Gold Corporation. Gold can be tough. Gold can be good, but it can be tough. It's loose. Look at these tail bars. It's got an earnings per share rank of 81, but a composite rating of 99 and relative strength leading the stock in a new high ground at 96. Perhaps it'll take out these tops. Is this a long base? Folks, look at this pattern right here versus when it did this. See the difference? Loose, 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 high investor emotions. You don't like high investor emotions, all right? Something to consider. But this was a good volume bar here. Perhaps it will lift through those tops. I'll have to watch it and see. Next stock on the list is Newmont Mining, Newmont Corporation, all right? Got the wrong ticker symbol here too. I was going to say that's not what that is. Let's get down to it. My mistake. I am sorry. There we go. Newmont Mining. As soon as I looked, I go, no, that's not it. Newmont Mining. Gold, silver. A+ rated group. Composite rating 99. Relative strength 96. Good volume. Going sideways. C accumulation distribution. Perhaps it will lift across these tops right there. With volume in a good market. There's some constraints for you. Things to take into consideration. All right? Can't stress that enough. It's in the top 20 groups. Next stock on the list, and we're basically almost done, is Hillrom. Hillrom Holdings. Medical Systems Equipment. All right? Lifted up on decent volume. It's got an earnings per share rank of 87 and a composite rating of 96. Relative strength is 87, leading the stock in a new high ground. That's a plus. But I do stress, this is not a tight, orderly pattern. Don't force it, folks. That's all I can say. Please, practice some rules and discipline. I can't stress that enough. Kroger. Kroger's lifting up. This is in, again, the top 20 groups. Earnings per share range 67. Composite ratings 91. Spikes up, pulls back, starts to lift. Loose. Just loose. You've got to always take that into consideration. Always. You can say, well, Patrick, man, what do we do with it? Well, I'm going to show you something here. All right? I'm going to show you some charts. Zoom. These past key list winners. Lifted right there. Nice lift. That's what we're after. Okay? Can't stress that enough. Nice. Going to drag this in here. That'll work. Show you another one. Upland. Look at the nice base. By the way, I'm just pointing out, yes, past winners that we had on the key list, that's not the issue. It's studying the chart. That's what we're after. Here's another one for you. I'm just doing these random. Look at the base. Look at the base. Clean and simple base that a sixth grader could see. Volume surge through the pivot. Simple enough. We'll do just a couple more. There we go. Kirkland. Longer base right here. Great numbers at the time. Gold, lifted, and another spot. Look at the long base. Look at the volume. It was in the top 10 groups when it broke out. Last one for you, just to help you. This is what we teach every day. Upland. Nice long base. It was a key list stock. Lifted right through there. Look at the volume pickup. Clean and simple. What's the moral of that story? I'll share this. Focus on longer, clean, and simple bases. You do not need to find a cup and handle, but find patterns that consistently lead to good gains. And what are they? I will tell you. A clean and simple, longer base, and look for volume surges, preferably in the top 20 groups, and it's got last quarter's earnings up 40% or higher, or last quarter's sales up 40% or higher. Quantify things. I periodically taught statistics on a university level, even on a graduate level. Quantify it. Focus on the best of the best. And you know what? You'll stack the deck in your favor. and turn off the noise. I hope this helps you. That's my goal. Speed up that learning curve. Please, last thing I'm going to say, and this is the most important part of this entire video, please be careful. Please keep distance from people. Please wash your hands. That's more important than any of this stock stuff. Our health is very important. Without that, without our health, none of this matters. Thank you all. Take care. Have a good, safe weekend. Thank you.